Good evening, everybody, and welcome to Metropole TV, the first 24-hour business channel here in Nairobi and in East Africa, in fact. My name is Allocating Sachi. I'm the host of The Smart Investor. It's a pleasure to be with you again this evening. Let me start with some breaking news. Jomo Kenyatta International Airport was shut for a few hours. There was a bomb scare. It's turned out that it was a fake news or fake bomb scare, and that the airport is open again. And do remember, they revalued their property portfolio and discovered it's worth $1 trillion shillings. That's the Kenya Airports Authority. A few days ago, we spoke about that. But ahead of the holidays, it's good to know the airport has been reopened. It remains the hub for many parts of East Africa and the rest of Africa, and a lot of people will be catching flights. I couldn't even get on one for this weekend. But that's positive news. The airport's reopened. If you've got plans to fly, just check in and see that there aren't any delays. Let me start with the state of the economy. Governor Dr. Patrick Njoroge, the central bank governor who was visiting Washington for the IMF World Bank's spring meeting, has been doing a lot of investor relations. Investor relations is when you go and talk about the economy or talk about your company with a financial market-driven discussion, as opposed to public relations, which is slightly different. And I have to commend the governor for being actually the preeminent investor relations practitioner for Kenya Inc. And it's good to see somebody who's batting on our behalf, not afraid to get on international TV and talks a very positive and good story. However, he was critiquing the IMF's view of the shilling. I don't know if you remember last year, the IMF came out with this idea that the shilling was 17.5% overvalued. They also spoke about it being a managed currency. A managed currency is one which is not free floating. Does not move according to the market. So what they were saying, some way the shilling was controlled. I said at the time, this is unfair. This was an unfair criticism. Take a look around our continent. We've got all kinds of voodoo FX regimes, from Zimbabwe with its RTGS and all kinds of other quasi currencies. Nigeria, two-tier system. So many other countries don't even allow you to freely convert your currency. Here, you can go out the door, go into a bureau, go into a bank, change your money for a 50-cent bid offer spread. Really, it is a remarkable and very positive thing that we have. So I think the IMF, like Dr. Patrick Njoroge, were out of line. And furthermore, given our borrowing, if the shilling fell by 17.5%, our debt to GDP would go from something like 58% to 70%. It would be unconscionable. It would put enormous pressure on us. So actually, we need a strong shilling. This is a fact. And Dr. Njoroge, who of course worked, I think, for about 20 years for the IMF in Washington, has pushed back and pushed back hard. I don't think the august institution of the IMF is used to pushback of this nature. So all credit to him for standing his ground. He says, we do not prop it up. We have a flexible exchange rate. We do not target a rate or direction. The shilling, however, softened. You remember just a few weeks ago, we'd gone below 100. We had a 2-digit handle. We're back above 101 as of today. And that's around concerns about the drought, our food import bill, and also an oil price which has been going higher and higher all year, beginning to make people a little bit more defensive around the shilling. But really one of the best performing currencies in Africa. Last year, second best against Egypt. The only two currencies in the entire continent which appreciated against the dollar. And that of itself is the message. And often you've got to hear the signal for the noise. And the signal in the noise for me is that the shilling is well priced at these sorts of levels. We don't really want it to go up or down too much. And I, for one, fully endorse the comments by Dr. Njoroge. The issue with the shilling, of course, is black tea, one of our biggest exporters. Conversation in the markets is that our production is halved from what it was last year, which was a bumper crop because of the very good rains. And this boils down to the rain issue. And Dr. Njoroge, who predicted GDP growth this year of 6.3%, says if the drought does not get better, we could look at 5.3%, 1% off his forecast. I would think that there's a risk of more than that if things don't start to turn around on the rain front. He said the drought, if severe, could lower growth by 1 percentage point. He was speaking to Bloomberg TV. Goes back to my point that even a central banker, it's not all about monetary policy, is it? It's also about meteorology, the study of the weather. And the reason they're saying that we are seeing a very dry patch, at least this is the Famine Early Warning Systems Network, which is funded by the United States Agency for International Development, USAID, and they're blaming the failure of our long rains on the cyclone that hit Mozambique. And what they're saying is that redirected moisture from East Africa, where we are, further down south. If you follow the border, of course, Mozambique is just south of Tanzania. So it basically sucked off all the moisture, and that's why we're in this very, very dry period with the occasional drop of rain. We're all waiting for those rains, and the rains, if they don't come, will have a big downside effect on our economy. Now, the Daily Nation, which has been the iconic print newspaper here in Kenya, it was set up by the Aga Khan when he was 23 years old. That's why he's so attached to it. It was one of the first businesses that he set up when he reached his position as the leader of the community. They have reported another slowdown in their results. Profit fell 16.4%. They're saying the decline was mostly due to depressed regional economies. They discontinued government advertising business from July 2018, and I'm going to come to that because the chairman made some very forthright comments, which I will just tell you momentarily. Revenues from digital grew by 13% in 2018 versus 2017, a far cry from the 100% increases we were seeing a couple of years ago. And in some very forthright comments, he basically accused the government, listen to this, of running a criminal enterprise out to frustrate and kill businesses. He says government, both national and county, are not paying their debts. Now, that is a strong comment, isn't it? And one that one cannot avoid. And I think a lot of people sympathize with that point. You remember when we had Nzetse Were here, the development economist, she was telling us, and as was James Mariu from the Kenya National Chamber, they were telling us that $2.2 billion is owed at the moment. And nation obviously feeling the bleeding edge of that. And Wilfred Kiboro not holding back, not pulling his punches, coming out and saying it how it is. So regional economies, non-payment of debts, talking about audiences migrating to different platforms, exhibiting diverse consumption patterns. And look at the trend in the markets is always your friend. It's a very famous saying, the trend is your friend. Let's have a look at the trend. Look at this group turnover on the slide, practically year on year for the last 5 years. Have a look at this chart, earnings per share. How much are shareholders earning for each share they hold? In decline as well. Have a look at this one, dividend. So many people in Kenya, investors, look to the dividend. Look at that. That dividend payment is a 10-year low payout. So what we're looking at is a business which has been struggling now for nearly half a decade. It's a super franchise. It's got incredible real estate. The nation is premier real estate. But you know, it's a Schumpeter moment. Schumpeter was this Austrian economist, and he talked about creative destruction. He says there are times when businesses basically have to reinvent themselves. I'm not saying we're at a Schumpeter moment of creative destruction, but what we are, this is an oil tanker, and to move and turn the oil tanker is very hard. And still, I don't see a defining, clear idea as to how they're going to reinvent themselves for the 21st century. They've got a tremendous building which looks to the future, as it were. But at the same time, this business needs now to come up with a new strategy. It needs to come up with a more with it perspective. There's a lot more competition, of course, but these are not good results. They're very poor, and I have not seen the silver bullet which is going to turn things around. So disappointing overall. Let's move on to Sudan, of course, has been in the news practically every day. Now we've learned President Omar Al-Bashir, who was president for 30 years, and it's practically Shakespearean, isn't it? Like Tiger Woods, you hit the highs, you become president, you become the champion golfer, and then you fall down to earth. In Tiger Woods' case, man, the guy came back. What a comeback. Incredible. But President Bashir, no comeback for Bashir. He is currently being held in Kober maximum security prison, where he put many of his own enemies. And look at that. That's how history moves, doesn't it? You imprison everybody in this prison, and then you end up in it. Now, it's still not clear where this goes. The people have got to stay on the street till they get their civilian government. That's what they're demanding, but they're not getting it yet. The new de facto head, Abdel Fattah Burhan, was visited by Saudi Arabia and the UAE, who, it is being said by many commentators, have supported his candidacy very, very strongly. But the point is, I'm not convinced that the Saudi or UAE model is going to work for the people who I've seen on the street. These people want their freedom. Listen to what they're saying. They're saying they're not going to leave those streets till they get a civilian government. And there you have it. You have the forces of the future, the young people. Africa, of course, youngest continent in the world, average age is 21, but some of our leaders are the oldest leaders you'll ever find anywhere. In politics, it's called a gerontocracy. So we have this incredibly youthful population ruled by gerontocrats, but now, like the wheelchair-bound Algerian president Bouteflika, who's gone in the departure lounge, Bashir is gone, but the key issue is what comes next. And Bashir, I suppose, will find out what comes next from within his prison cell. Zimbabwe, we touched on that briefly yesterday, but this is not looking good. Bread prices nearly doubled yesterday, and people are already struggling from a big increase in fuel prices. Now the bread price has gone up. Inflation, as I told you, 66.8% annualized. If you look at high inflation rates, you normally find revolution and unrest. Highest inflation rate ever registered was in Zimbabwe. It was in the zillions of percent during the time of Mugabe. He had to then get his unity government in order to try and stabilize the situation. We're seeing a similar breakout in the inflation rate. And clearly Zimbabwe is going to have to pull some rabbit out of the hat in order to stabilize the position, because now it looks in complete disequilibrium. And I'll tell you a story from a long time ago. I used to be at a bank called Sumitomo, and Sumitomo had a partnership with an Indonesian bank. And Indonesia was going through a similar crisis, 1997 or 1998. And they asked Sumitomo Bank to make them a big loan, and we got on a plane, myself and the chairman, Konishi-san, and we went to see the president, and we were in the office, and because we had a bank there, we were going to support President Suharto. And we were sitting in his office, and he gets a call, and he'd been asking the IMF for help. And the IMF said, we'll give you the money, but you've got to remove the subsidies, and the food subsidies. And do you know what? He turned to everybody there and he said, I'll be gone in a week. And he was. course, Africa is slightly different. We're non-linear, but that is the point I'm making, is that it's a very, very similar situation to what Suharto found himself in. And Bashir, part of the reasons he got into this fix was because of bread prices. I think in Sudan they tripled the bread price, and look where it all ended. So bread and revolution, heavy duty correlation. A correlation is when something leads to another and has a very close connection with it. Now, where else can we go here? So Suharto, good example. South Africa, very hard-hitting report has come out of Unonics, which is a South African NGO. And listen to what they're saying. On a range of social and economic and governance measures, South Africa has deteriorated more in the past 12 years than any other nation not at war. Can you believe that? And they're putting South Africa in the same category as Mali. You know, they're saying the only countries which have done worse than South Africa are Mali, Ukraine, and Venezuela, and that South Africa today's, its peer group today is Colombia, Jamaica. Actually, Jamaica is quite a positive story. I don't know why they put that there. Latvia and the Philippines. Whereas in 2008, it was comparable with Portugal and Slovenia. So what they're saying is 9 years of Zoomonomics or Zuptonomics or Guptonomics has created tremendous damage in the South African economy. They're saying, this is the head of Unomics, Claude Bissac, there is the strongest likelihood of him being a one-term president, Cyril Ramaphosa. The election in South Africa is on May the 8th. There's a whole bunch of elections happening on the continent, but that's a big election. The ANC, of course, will win. This is the party of freedom. This is the party of Nelson Mandela. But we have to look at its majority, which has been reducing. And then they're criticizing South Africa, saying the ability of politicians to make unpopular decisions needed to boost growth is hampered by this imbalance. Economic policy serves narrow interests, thus generating insufficient and unfairly allocated growth. I'm sure Kwame is going to have something to say about this. We'll talk to him. That's Kwame Owino, is going to be my guest in the second half, IEA. We'll talk to him about this. Populism rather than developmentalism is an easy temptation, with the economy a tug of war between mutually distrustful groups. South Africa's state performance peaked in 2007. That year, its economy and governance were at their best. That was President Mbeki, I think. That was that period before he was toppled by Zuma. And they are saying the developmental state project has failed. South Africa is now a fragile state, expected to continue to weaken. And that reminds me of a quote that Cyril Ramaphosa made. He quoted a very famous Nigerian writer called Ben Okri. And Ben Okri writes in this style of magic realism. It's very beautiful. You should read him if you get a chance. But this is what Ben Okri said, and this is what Ramaphosa quoted. We dream of a new politics. We dream of a new politics that will renew the world. Under their weary, suspicious gaze, there's always a new way, a better way that's not been tried before. Let's hope so, because obviously we need something, a positive trigger, not only in South Africa, in Nigeria. I'll come to that in a minute. Egypt, as Parliament has approved an extension of President El-Sisi's rule until 2030, i.e. President for life. Overwhelmingly approved a constitutional amendment that would allow him to remain in office through 2030. It's a rubber stamp parliament. They're going to do whatever he tells them. That we know. You know, I've got lots of issues with the suppression post the revolution in Egypt. I think, you know, it's been at a tremendous cost of people. They've incarcerated thousands and thousands, disappeared. We don't know where everybody is. But the one thing Al-Sisi did right is on the economy. He devalued his currency, and that economy is now growing the fastest out of the big boys in Africa. Nigeria, South Africa, Angola, and Egypt. If you look at those four, Egypt is growing at about 4 times faster than everybody else. And that's because he made the right decisions on the economy, though we are allowed to disagree with him in the way he's managing the politics. Coming to Nigeria, listen to this. World Bank says that less than 1 in 10 Nigerians have access to piped water, and 20 years ago, 3 in 10 had access to piped water. That's an unbelievably backward development result. Nigeria's stock market has fallen 50% since President Buhari came to power, the worst performing stock market over those dates anywhere in the world. And I look at every single stock market, there's well over 100, the worst. And often the markets are the message. There is a message in that, and that's very clear to me. Baba Goes Slow, that's the nickname of President Buhari's voodoo level FX economics. You know, when you criticize Kenya, go and have a look at what's going on with the FX rate in Nigeria, 2-tier FX rate. If you're well connected to the politicians, you can get a lot of money at a cheap rate and resell it. That's what they were doing in South Sudan. That was the way they took a lot of money off the central bank. But essentially, it doesn't work, never has done, and it's a poor palliative for any economy, and they refuse to do anything about it. I couldn't believe this number. Chinese wig sales, wigs to Africa are booming. In 2017, China exported $3.2 billion worth of hair products to Africa. I remember speaking to L'Oreal, and they told me, Ali Khan, you won't believe it. Kenyan and African ladies spend more money on their cosmetics than African men spend on beer. Have a think about that. So Chinese $3.7 billion market, that's something we all need to look at. Now, Jumia, you know, we had the CEO of the Kenya business in a couple of days ago. On Friday, I said I thought it was a buy. This share was sold at $14.50. It hit $40 yesterday. So that is an unprecedented, exponential, off the charts price move if you ever wanted to see one. That means if you'd bought it on Friday for 14 shillings, for argument's sake, it's worth 40 shillings today. You're not going to get returns like that unless you're into avocados, for example, or Bitcoin when those things were surging. It's very, very exponential. Now, big numbers came out of China this morning. China, obviously the big beast, one of the, you know, it's a bipolar world, isn't it? You've got the US on one side, you've got China on the other. These are the big economies. And of course, what happens in China affects us. If China ever caught a cold, we would be in ICU, for example, across this continent. So everyone from the world over looking very keenly at these numbers. They recorded 6.4% GDP growth. Pretty good for an economy that size. That 6.4 is a big number. They're creating, like, you know, huge economies every year with that sort of figure. 6.4%, a lot of stimulus. They've thrown money at the problem. So the question is it sustainable? It's like giving a patient who's sitting there unconscious on a table, giving them, you know, that sort of massive amounts of drugs. But the market has taken this positively, saying, look, you know, it wasn't so bad. We expected it to be much worse. And interestingly, there were some very interesting points. So listen to this. GDP up 6.4%, market expected 6.3%. Retail sales, 8.7% increase. This is the pivot away from infrastructure to the Chinese consumer. Interesting, that detail is telling you that pivot is working. Factory output up 8.5%. Online retail sales, which is what Jumia is going after in Africa, up 15.5%, and made Jack Ma, of course, and Alibaba trillionaires. And this is all about the miracle of cheap money. As I said, huge stimulus, giving a patient an enormous amount of drugs, and of course they're going to start moving about. And just to finally finish up before we move to the second half, the Australian dollar tends to track the Chinese economy most. If people feel confident about China, they start buying the Australian dollar, amongst other things. But that's a good proxy to look at if you want to have an idea of what the market is kind of thinking about China. This is Metropole TV. This is The Smart Investor. My name is Ali Khan Satchu. We've got Kwame Owino, who is a macroeconomist at the IEA. He is a really deep thinker about this economy. I'm looking forward to engage with him in the second half. Please join us after the break. Metropole TV, the first 24-hour business news channel here in Kenya and in East Africa. Thank you. Welcome back to Metropole TV, The Smart Investor. My name is Alikan Sachu, and we've got a fantastic guest for our second half. This is Kwame Owino, the Chief Executive Officer of the Institute of Economic Affairs. Kwame, let me first give you credit, because we've been on a few panels together, and you actually forecast the situation we're currently finding ourselves in. And I think it's good for people to recognize those folks who called it. We always appreciate people in the markets who look into the future and forecast what might happen. Kwame, let's start with public debt.
Yes.
I mean, I saw the latest World Bank report actually had it tapering and saying that it's come down like 0.5%, but then I thought to myself, that's all about the GDP denominator that they're using.
It's funny.
You've been talking about this for a while. Are we at the tipping point yet or not, in your view, and where are we?
Okay, Alikan, you know, just like everybody else, that nobody knows when it tips.
Yes. That's a good point, actually.
Yeah, nobody knows. But there are just two things that worry me, in the sense that all the things that should worry us in terms of the debt stock relative to the revenue, in terms of, in other words, how much money we need to collect in revenues to pay debt on an annual basis is actually stagnant, and the debt stock is increasing. So that's the first. And the second thing that worries me is that the tenure of the debt, which means the duration, the average
is too short. Yes.
So that means that the payments have to come in quickly. So if revenues are not growing fast, it means at one point we're going to hit the wall, and that's not a nice thought to think about. I mean, it makes me uncomfortable.
So further north, Prime Minister Abiy said the same sort of thing. He called time. He said, look, we can't, and he renegotiated, for example, the loan on the Djibouti-Addis railway line.
Yes.
Do you think we've got to go and speak to some of our creditors and say, guys, you know, this doesn't make sense. We're making investments for the next 50 years and we're paying them off, trying to pay them off in 5.
Precisely. I think we have to.
Yeah.
Because we just don't have many more options. I know government talks about fiscal consolidation, which is living within our means. But the biggest item that we pay for right now is not even salaries.
What is it?
It's debt.
Yes.
So we are redeeming debt both in terms of principal and the interest. So we need to buy time. And I think the time to do it is right now, but just basically going out, not to threaten a default, but to say, look, you're putting us in a situation where you're going to force a default on us. So yes, some of them have to be. And yes, we have to mention the C name.
The D word, my brother.
Oh, no, that's the point. That's the point.
Yes,
we said, look, guys, we will not, and we have a good history of never having defaulted. But he said, look at our circumstances. I think our economy is going to suffer a big shock this year as well.
You do. The governor was talking about 1%.
Well, it's probably much more. I don't think it'll be 1% is too modest. I think we've had two repeated seasons of low, below average rain. So that was in October. And so when the two shocks come together, my view is that it's going to be much more than 1%.
And we're already seeing food prices spike.
Food prices are going up, precisely. Farms have employers last week gave warnings that they might have to downsize.
Tea workers were sent home.
40,000 of them, basically, because of all this. So when you put all these together, the shock might actually be much bigger than the 1%. I think 1% would be modest. It's possible I even double that, 2%.
Wow. Because ultimately, growth is a silver bullet, right?
Precisely,
it's growth. That throws off more cash.
Yeah, it throws off more cash for people spending, but it also generates revenues for government to pay.
But are these investments, for two questions to you, are you comfortable with the return on investment that we're getting, or do you think it's too early to make that judgment on some of these infrastructure projects? And then, this infrastructure-led GDP expansion, are people feeling it? Because whenever I walk around, no one is experiencing that. The mood is not like vibrant.
Yeah, the truth about the infrastructure-led growth is that many Kenyans haven't felt it, and they're being honest. And and that's throughout the country. I mean, people who are in Nairobi say, "Look, you're telling us this economy is growing at 5.6%. Where is this growth?" You can sell. I mean, a few farms, of course, you're familiar with them, have given profit warnings.
Yes.
So really, it just is GDP growth that we record by building brick and mortar. And specifically the railway line. I mean, if you talk about the railway line, initially it was supposed to deliver efficiencies. So far, so far, business people know it has actually raised their costs.
It has.
It has raised their costs. So in terms of the efficiencies that were expected, it's very, very clear that the big investment outlays that we did, stretching infrastructure in terms of power, we stretched power to 2 million, 3 million new homes. 800,000 of those did not pay their second month bills. So obviously, those investments, because money has alternative uses, they haven't gone the best way. So yes, that's reason for us to be cautious about using an infrastructure-led growth model.
Let me now turn you were in Kisumu, you were telling me at the State of the Devolution conference.
Yes.
Tell us a little bit about that. You know, what was, first of all, what was your reflections on that meeting?
Yes.
What was your takeaway? And then, is it working? Is it too expensive? What do you think about it?
Good. The legislative summit in Kisumu, I think it ends tomorrow, not today. Today, I was there on Monday in the first session. And one of the things that became apparent is it's true, and governors realize it. Not one, a couple of governors actually stated it in the plenary, that we understand that we have bloated service. But they don't take the blame by saying, look, the national government forced on us staff that they should have paid, but for which we are paying. So we need a conversation. And this was stated very, very directly by the governor in the host county, Governor Nyong'o, and a few others who reiterated that. I said, we need a conversation about giving a one-time golden handshake to actually trim our services, because we agree we have people that we do not need, but their expectations were raised by the fact that the old councils had people, and then of course the national government also transferred people without their choice to them. So this conversation is certainly...
So you think it's top-heavy in terms of people, recurrent expenditure, too much?
Yes, and these governors themselves admitted it. I'd have expected them to be defensive. I am glad that at least many of them who were there actually conceded it. So that's half the problem solved, in the sense that we've conceded there's a problem, right? The second thing is to make a step about what do we do about it. It definitely means some people have to be asked to retire, which means we need some money to be able to pay them off, or at least to give them proposals for to take home some financial compensation. That's going to happen because we're already locked in wages over the long term. So the sooner we solve this, the better. The second issue was the Commission on Revenue Allocation has a new model. Or rather, as a new proposal for how revenues will be shared.
What is the difference in the new one and the existing one?
Well, the new one is far more comprehensive. It has many more parameters. I think it has six different variables, starting from expenditures on health, agriculture, infrastructure as well, poverty rates, and all that. So basically what it's saying is that the earlier ones considered population, and that's a very, very difficult thing. I mean, that was a politically sensitive one, because people thought that, well, there are places with smaller populations, but they're getting an equal amount and stuff like that. So all they're trying to say is, let's concentrate on the services that county governments are supposed to serve, and let's use that as a way for the weighting of how much money counties receive. It's a good one, I think. It's much better than what it is. What became very clear to me is you can't use any one of those models to solve every single problem that Kenya has.
Yes.
So I think the transparency around how it was arrived at and what the weights of that is it's a good situation to start. And the CRA, I think, is on the right track. Governors, of course, there's somebody from the Treasury who also admitted that this is better than what we would have had. And my view is that Kenyans should accept that perfection is the enemy of the good. This is better than what we had, and so we can make steps and use it to distribute revenues, because it's a very contentious political point.
Let me come to something else. You know, if you look at a continuum of performance, there has been some really great outcomes as far as I'm perceiving it. Kivuta is one.
Yes.
And obviously it's a continuum. Do you think, because this was what devolution's about, that you can connect the dots and know it's Kwame who's my governor and he hasn't delivered, and therefore I'm unhappy with him, whereas before the government was somewhere up there in the stratosphere. Do you think that's happened, and do you think we're going to have a pull towards better performance going forward, and therefore this experiment is still in its infancy and we shouldn't throw it out with the bathwater? Or what's your thinking from sitting where you are?
Well, I think that's the number of experts who were invited, some of them from countries that have had some form of devolution. And one of the things that they say, look, a 6 years experiment is still too early. But the good thing is, if you continue to focus on the things that matter, audit every step, and then you fix them over time, then obviously you get better outcomes. But that stated, my view from the population in general is devolution still remains popular. So as a political point, I think that's useful. It has creases here and there. And one of those, of course, is that they're sterling performers. I mean, Governor Kivuta has done fantastic work, to be honest, and he started in a very difficult form. This was one of the counties that was almost suspended.
That's right.
Yes. So it's possible to overcome those political points and everything else. I think he's also an inspiration to his colleagues. Some receive much, much more money than he does. Some have smaller populations. And if you were to choose, Makueni would not have come out 5 years ago as the county to look like. Look at. So basically, I think he's applied some thought. He's used professional advice very, very well. And if that happens, the entire exercise will be. But one other thing that we have to accept is the good thing about a devolved system of government is that it allows for experimentation to occur. So we can try different things in good faith.
Who is trying? Who's experimenting, in your opinion?
Well, I think that the governor of Makueni, once again, is experimenting. He's decided, look, we have these old models of procuring things. He sat in and tried to say, how can we build a health facility or a hospital for X number of shillings and get the most out of it, right? So basically, what that means is that it's possible. It's possible to actually cap what you want to expend and try to think about how much benefits do we get from this amount of money that's available. Basic hard constraints that, I mean, businesses know. You plan within the money that you have. These guys did all the other things. He shrank the construction period, which was accepted as 4 years to 1.5 or 2 years at the most. So it's possible to actually take raw numbers or some of the ways in which things have been done and say, why can't we do it better? Some experiments might not work, but if it's done in good faith, I think people will accept it. In Kivuta's place, it's clear that he's done pretty well.
Let me turn to what's been a really hot topic today on social media, in particular is the Housing Levy Fund. And I was looking at the commentary because we do some media monitoring, and I would say the negative opinion on this is at 99.99%. I could not find one person who had a positive thing to say about it. From where you're sitting, what's going on here? I mean, you know, I understand the president's keen on his Big Four legacy, but this level of unhappiness with what is being done by the executive is surely, you know, off the charts right now. What are your thoughts on what's happening?
My thoughts are, one, I think even if we needed a housing scheme, the way this has been designed is so poorly done. Because we claim it's affordable housing. And the way we are structuring it is for urban areas principally, which means we are trying to get money from working people. That small cadre of 2.6 million people who pay taxes because they have regular incomes. And then we are trying to use that to construct houses that are very expensive, calling them affordable housing. So that's the first thing. That structurally, I don't think they're solving the problem that really exists. But the one that most worries me is because a government has to believe it's its own rules and its own systems. So this matter has been taken to court, and the court asked for a freeze, right? It didn't abolish it, asked for a freeze until the case is heard. And then government goes out there, issues a press statement, and what is it telling us? That notwithstanding the fact that court matters exist, the KRA expects to collect. So we've sought some legal opinions, and they're, I mean,
as the IEA.
Yes, we did.
Yes.
And the lawyers told us that, look, on the strength of the fact that an injunction exists, you cannot deduct salaries from your employees because they'd sue you. They'd sue us. So basically, what have we done for this month? We will not until we have further instructions. That's it. It's a good thing that in the afternoon as well, a different court, I mean the labor court, simply stated and reiterated that the instructions of the first court stand. So what we'd like to see is government going to tell us that a newspaper advert and instructions from the KRA should supersede court opinions? That's a very dangerous ground to go to.
Wow. And what do you think of the Big Four? I mean, what's your view? Out of those four, what do you think the government should be allocating money to, and what would you do differently?
Okay. I think if I was the government, I wouldn't be trying to solve the housing problem in the way you're trying to solve it. You can't throw money at problems. And secondly, I think the cycle, it's too late because this government will not have time and they'll not have those resources. What they need is proper fiscal consolidation. So if I was to choose a... So
you're saying there's no balance sheet space is what you're telling me?
There isn't. Yes. Let me say, my opinion is that there's no balance sheet space, because there are many things that government has had to suspend. So obviously, they will not be able to spend it. But there are critical things that are important. First, obviously, food security. I mean, we just had a couple of weeks back, well, the problem is is not as acute as it was, but I think if the drought continues, we are going to face another, we're going to open the newspapers again, maybe 3-4 months down the line and find other Kenyans dying. So obviously that's one thing that needs to be solved.
You know, I met an Ethiopian guy who said, look, you know, since we had that famine all those years ago when Bob Geldof sang that song, Save the World, I think it was.
Yes.
He says no one has died from famine in Ethiopia. I said to him, how's that happened, given that your weather system must be similar to ours? He says, we have warehouses in every single district. The food is stored there. If there's ever a problem, we open the door and everyone has food. Okay. Why haven't we done something like that? I mean, why are our people still dying?
Well, I think the worst part is I do not have that answer. But what I found a bit, what indicts this government is that there was an early warning system in November and December, which was this, the softer, what we call the shorter rains had failed, right? And what that means is there's going to be price pressure on food in January, and that happened. So we obviously knew that this was going to happen. The rains have been delayed as well, so it should not have happened. And the government's response is that it was a distribution problem, yet the food was available. If the food was available, it means somebody dropped the ball. That's just it. It's because it's not like food. There's no food in the stores. There's food in the stores, but it wasn't distributed in time to people who faced.
But I saw a comment yesterday by the millers saying, actually, you know, the government is saying all this food is at the farm level. They haven't given it to us, but actually, the millers were skeptical that that food was at the farm level. As you know, people don't have the capacity to hold on to it. So I wonder, you know, what is the right story?
Well. That's one of the things that happens, because government makes declarations when there's an emergency, and they make all these declarations, and later when you sift through the facts, you find that they misrepresented. So again, a government that lies to its people is a dangerous one, and it doesn't treat crisis very well until it becomes overblown. So that's also one thing that we have to bear in mind. If people learn that you don't trust government statements, which I think is what we're facing here, then obviously public trust will be gone.
And that's not heavy charges, Kwame, that you're making.
Well, I'm simply stating
constructive, but actually heavy.
It is, because if millers, whose business it is, and they need,
and
they make money from that,
and they're saying we're paying above the market, and we can't get anything.
So if they're paying above the market and they can't get, and government stated a few weeks back that we have enough grain for several months, then obviously someone's lied. And millers have skin in the game. They have it. I mean, if they don't put in staff, they're the ones who are going to lose. So obviously, they don't have an interest in hoarding when prices are high. So if they're not, then it's clear government has made inaccurate statements, and that's not good for its own credibility.
No. Let me now ask you about the private sector. We just saw Nation Media's results. I've never heard Wilfred Kiboro, who's normally extremely genteel, speak so aggressively. I mean, I can't remember the remark, but it was like Gangster Nation or something. What's happening in the private sector? Is the private sector able to cope with this economy at the moment? And what are you hearing from them?
Well, I hear, I read that statement as well. I didn't believe it actually, because the first time I saw it was on social media.
That's right.
Someone was trying to incite trouble. But subsequently, of course, news items showed that yes, Kenya's private sector isn't very happy, to be honest. And I think they're usually very polite. But what they're showing, and one of the things that Kibora has stated not once, I think this is the second time that I've heard him on national press stating it, is that government owes us money that it's not paying.
This is a symptom of a disease, right? He's one person, everyone else is saying that there's about 2 billion.
So it's at the national government level, and it's also at the county governments. And the county government state that, look, our share of income that's supposed to come every quarter or every second month has not come, so we're not able to pay. We've been cutting our own budgets and everything else. And it suggests one thing. I think my view is that government is at the beginning of a debt stress moment, distress, which is basically because you have debts which you have to pay for. You do not have sufficient money to be able to actually pay for everything that's on the table.
So let's unpick that. What actually happens if that prediction comes out? What happens? Is austerity forced on the government? How does it play out? You know, imagine you're thinking you're making that prediction, but what will actually happen in your mind if that moment is upon us?
Well, if it happens, we'll just find out
2 billion will become 4 billion, and we're going to have a bigger mess.
Yes, obviously. What it means is that so you owe people 2 billion shillings, and the first thing is they're not able to make their own forward payments to other people that they owe. Then some of the surprises that you see now, private sector saying, look, we have to lay off people because we can't continue to hold to run liabilities when we're not able to get our money. And then that obviously affects returns. When that affects returns, revenues to government don't come in on time, and the spiral starts.
Do they get it, do you think? Do they get it?
I don't know. When I hear government speak, last year when they talked about, last year, yes, when government talked about establishing a national debt office, one of the things they were conceding is, look, we haven't had a good look at this. I don't think they do. But the only institution that could force government to actually come to its tracks, force it to actually come to this and face it, is Parliament. I don't think Parliament is the wiser. Yes. That's what I fear.
Oh boy.
That's
we're in a double whammy.
So basically, the fear, my fear is that it'll probably be something that forces sharp austerity. You're not able to make payments that are due. You're not able to pay salaries. God forbid that it comes to that. But obviously, if we do not wake up to it, that's what would happen.
But Kwame, they say sometimes you need to have your feet to the fire before you make the reforms that you need to make.
Of course, yes, but it need not be there. Yes. We can buy ourselves. We have a couple.
You're saying we can make a few decisions which would normalize this a little bit.
Certainly, and one of them is just to start by telling especially those we owe money in the foreign place. Look, this is our situation. We made a few assumptions. They've not held, so it means that we have to make very tight adjustments. So we are asking you to allow us to buy time, just buy time, and get some growth to give us revenues over the future, and we'll pay.
I've got 2 minutes. I want you to talk about Africa, because if we look around the continent, we've got revolution in Algeria, we've got Sudan undone by bread riots, we've got Zimbabwe inflation about to go off the charts. You were listening to that South Africa report, which said, South Africa today is regressed.
Yes.
The most of any country not in a war. How are you reading what's happening?
Well, it's difficult to read Africa's numbers and the narratives coming from most of the big institutions.
Yes.
So it doesn't just have to be Mozambique, which already had problems, and then of course the flood. South Africa itself, you all know about what's happening about the private interference, or rather that fusion between private businesses and a few people through corruption and state capture, what they call state capture, but I think it's just corruption. Nigeria itself, obviously.
Well, it's going backwards.
It's going backwards. I think, if not possible, it could tip into a recession. Of course, our country as well. I think, notwithstanding our impressive growth, it's not leading to or rather, comparatively impressive growth, it's not leading to new areas. We have South Sudan. So the African continent right now, you can simply say, look, this is a continent that's gone back to sleep, and we really, really are in trouble. I think most African countries are in really, really, really serious trouble.
What African country in your mind is doing well, that you look at and say, they're managing it quite well? I quite like what I'm seeing. Is there one or two?
Well, yes, I think so.
Yes.
Senegal.
Yes.
They had elections, went very, very well. I think the economy
Macky Sall, this has been a good.
Yes. I think Botswana as well.
Yes,
obviously.
But they've had a long history of good management.
Yes, they've had a long history. But that's a good thing. Is once you start to behave well, it gives you returns, and the incentive to keep doing the good things happens. Ethiopia is looking up as well. I don't think they're out of the woods yet, but obviously I think the Prime Minister has
I think he says the right thing, and
he has the guts to take the difficult decisions. So outside those three, all the others, in my view, are just paddling along.
Kwame Owino, real pleasure to have you on our show.
Thanks for the invite. Thank you very much.
You've got a seat here anytime you want to come and tell us, or you've got a report coming out. Real pleasure, Kwame. Thank you so much.
Thank you too. Thanks a lot.
That was the Chief Executive Officer of the Institute of Economic Affairs, forthright, really interesting conversation. If you've got some feedback, do come back on and tell us about it. This is The Smart Investor. This is Metropole TV, the first 24-hour business news channel. My name is Ali Khan Sachu. I was your host. See you back, same time, same place tomorrow. Thank you very much for watching.